Hello and welcome to tonight's webinar, everybody. We are talking about managing your finances after graduation tonight, and the webinar is brought to you by the Early Career Nurses Network. You may have heard it called the Newly Registered Nurses Network. Previously, we've just done a little rebranding, and we'd love you to come along on that journey with us. You'll see that in some parts of the slides you might see newly registered nurses, as you can see on our email address below, but please do get in touch with whichever name of network you find. It's the same thing. My name is Kendall Andreasen. I'm one of the professional leads here at the Royal College of Nursing. I'm the professional lead for acute and emergency care and defence nursing, but I also look after the Early Career Nurses Network, which, to be honest, is one of the favourite parts of my job. So I'm really delighted to be hosting this webinar tonight. We have you for the next hour. It's part of a bit of a webinar series we've been putting on lately. So if you did want to join the network or check out any of our previous webinars, we've done ones on leading your first shift in charge and getting your first job as a registered nurse so far. Please do use that QR code that you can see at the centre of your screen to join the network. If you're an RCN member, that is as simple as ticking a box on the web page that QR code takes you to, and you'll be able to access all of the content that we put out. We've got some great plans for the coming years, so it will be great to have you on board. But tonight we are talking about finances after graduation, and that is because we have heard that does worry a lot of new graduates, as you can imagine. And we really want to support you to try and make your finances as stable as possible so you can concentrate on doing the great job that is nursing. And we've got some really, really useful advice lined up for you tonight. If we could just go to the next slide, please. This is our rundown. So as you can see, I'm in the preamble phase, and then we have Ollie Hill, who is a financial advisor from Quilter Financial Advisors, and he's going to speak to you for just a little over 20 minutes. And I've heard really great things about this presentation, so look forward to that. And then we have Claire Cannings, who is a fellow RCN staff member. She's the welfare lead for the Member Support Services, and she's going to talk to you for 20 minutes as well, giving you lots of additional advice. So we're really grateful to both of those for coming along. We will have a Q&A, so I'd love you to use the Q&A function to send us your questions at any point during this webinar, because we do have some time at the end to address some of those. And it's always really great to hear from you all, so do use that Q&A function. If you'd like to use the chat function too, please do that as well. It's always nice for people to introduce themselves or give us some feedback as we go along, and we'll try and monitor that. So I think that is everything that I need to say for now. So I'm going to pass you over to Ollie, who's going to share his slides for us.
Hi guys, thank you very much, and good evening everybody. My name is Ollie Hill. I'm a financial advisor and specialise in financial planning in conjunction with the NHS pension scheme. I'm here today to talk to you a little bit about money, okay? The science behind money, what it makes us feel and how we can potentially save, but also the value of a pension scheme. And we're going to go through a few things. We're going to hopefully by the end of today understand our pension. That might be the first step for a lot of people, and then actually how we can build wealth over time, ensure that we're doing the things we want to do throughout our life. Okay. I'm advisor under Quilter Financial Advisors. We put on a lot of these seminars, webinars, with lots of different unions, the RCN being one of our largest partners. They tend to go down well, okay? And like I said, today is all about giving you a bit of clarity, a bit of foundations, just to try and think about your finances, what it is you want to achieve and how we're going to do that, okay? So before I start, very simply, who we are. So Quilter Financial Advisors, we're a comprehensive advice service, okay? And we deal with all elements of financial planning. So yes, in the main, RCN members talk to us about their NHS pension, but actually we deal with all elements. We've got a very strong support network and breadth of expertise. There's a small team of us who specialise in the NHS pension. There's nothing we haven't seen before when it comes to it. We've got the likes of Graham Crossley and MediFintech. You may not know at this stage, but you may do in the future. when it comes to a bit more technical detail if you require it for your pension. Like I say, we deal with all elements of financial planning. So at the moment, you may be somewhat early into your career and want to understand a bit more about your money, a bit more about pensions. But as you go older and you go through these different financial life cycles, we call them, then actually we can help there as well. Okay. So on to the main topic of today, and it's all about financial well-being. How can we make sure we've got a good relationship with our money whilst we're working and planning for the future and doing the things we want to do both now and in retirement as well? And it is very simply, it's about making the most of your money and changing very often a mindset. So depending on how you've been brought up, very often will determine how you interact with money on a day-to-day basis. And everybody has an emotional attachment to money. And sometimes it's about changing these different things, these different dynamics, and having a bit of coaching to understand, one, what money means. Okay, what does it mean to us? What does it result in? But also how we can become less stressed about money over time, because that is, very common, unfortunately, in the country today. Now, one of the key fundamentals to understand first and foremost is this thing called inflation, or the cost of living, you may have heard of. Now, this is very simply the price of goods and services rising around us. And if our money and if our wealth that we've got is not keeping pace with this inflation, then in real terms, we're not growing. Okay. So very simply, if inflation is 5%, you may have heard this on the news. Sometimes inflation is a lot higher, sometimes a lot lower. If inflation is 5%, and let's say the interest rate we're getting on our cash savings in the bank account is 3%, that disparity of 2% now is the rate of purchasing power that money is losing every single year. And obviously over time, that's hugely detrimental to our finances. So this is one thing to understand, because we have to make sure when we're trying to build money, when we're trying to build wealth over time, we have to be able to beat this thing called inflation. Now, you may see in the news, inflation has been, somewhat all over the shop. It has. Okay, certainly the back end of 2022, when Russia invaded Ukraine, energy prices, all the rest of it went up. Inflation reached 11%, and it's really just important at this stage that we understand how this works, okay, and how we can best combat it. Now, fortunately, with your pension scheme, this is one of the real values of the pension scheme. It does go up with inflation. I'm going to talk about that shortly. Just to cover a little bit, it's a very common inquiry we get, and it's about energy, okay, and the cost of energy. And the energy market has been highly volatile of late. It has over the last few years. There hasn't been that many competitive deals around for some time, but that is slowly starting to change. Certainly with new fixed tariffs launching, you may be able to find deals that are cheaper than the energy price cap. So we tend to say sometimes that if you're on a standard variable tariff, it could well be worth looking into your options with this. But obviously it's hard to say because you don't know what's going to happen in the future. In the long run, of course, prices are still so unpredictable. But just one thing to note, because that's a very common inquiry we do get. Now, going back to this, the emotional attachment we have to money, and actually the psychology behind money. Of course, everybody very often has had some issues, some worries when it comes to money. What we're trying to do now is we're trying to understand it, trying to not bury our head in the sand, okay? And we're actually trying to take control. It's all about changing different attitudes, different mindsets when it comes to your income, your pay packet, okay? Because sometimes people don't have wealth, okay? And that's very common. But actually over time, if we get into good habits of setting money aside effectively, efficiently, where possible, then that is how we build wealth over time. And then it's all about making our money work harder for us, as opposed to us working for money. That's what it comes down to. So we're going to talk a little bit about today, how can we make a plan? Where do we start? And like I said, we don't want to do what this guy's in the picture is doing, burying his head in the sand. And use whatever method works for you, okay? So sometimes just jotting these things down on a pen and paper or a spreadsheet or a Word document, whatever it may be, really helps, okay? Just jotting it down, trying to make sense of what this means to you. And it's really important that we're thinking about this as soon as possible, okay? Because actually time is the key ingredient with any plan. Any financial plan requires time. the more time you can give yourself, the better. Certainly if we think about retirement planning, okay, and actually you can never start that too soon, because at some point you're going to want to stop working. And actually, if you've not planned for that, then, very often and very bluntly now, you may not be able to do it. You may have to work longer. Imagine some of the inquiries we get is people go, can I retire next year? Can I retire this year, Ollie? And actually, I have to tell them, have you done any planning? Well, no. Hang on a minute, then, may not be able to. And this is a reality for a lot of people. But actually, once again, if we can give ourselves time as long as possible, then we can be doing these things over the medium to long term. That's when it really puts you in good stead. Honestly, it does. So where do we start? 50, 30, 20 rule. You may have come across variations of this. This is one we really, really like. Actually, took it from Lloyd's Bank. Now, this is just one suggestion, of course, and it may not be suitable for everybody, but it's a good starting point for a lot of people. So this is a simple budgeting plan, and is useful for managing money, of course, but it's a way of dividing up your income into needs, wants, and savings, very simply. And it's a simple way of balancing, today's priorities when it comes to bills, but also your future goals. Because actually, if we're not setting money aside and we are spending our whole entire pay packet every month, then, what will ever change? Okay. We're waiting for pay rise after pay rise, but then are we carrying on, getting to these bad habits of spending every time? And obviously, it's not always that easy to be able to save 20%. It's not. But this is just the idea in the back of your mind that you want to be having. Okay. And sometimes just getting into that good habit, even if it starts at, £5 a month, just get into that good habit. Watch how that pot can grow over time. And once again, changing that emotional attachment to money that we're spending. And therefore, you're going to be feeling a lot better because you are saving. It's all about that different steps, different small steps you can take. It's going to change that mindset and help you in the future. Okay. So obviously you can see on the screen, 50% would go on the non-negotiables or the unavoidables, such as the mortgage or the rent, council tax, obviously, and things in there that you can't avoid. Wants, so this is things that it's not to say we're living on the rock now, okay? We're becoming a recluse. It's not that. We still want to be able to do the things we want to be able to do. It's just finding a balance, okay? Because actually sometimes when you do this planning to say, okay, well, when do I want to retire? How much income do I need? And suddenly there's a huge shortfall between where your pension is and your income requirements. You have to save, okay? You have no choice. Otherwise, you're going to be working for longer than you want to. Flexible guideline, like I say, okay? You can amend the figures to suit you. You can start, maybe a 50, 30, maybe 50, 40, 10, if you want to spend a bit more, whatever it may be. Big one is whether 30% of your income should be spent on wants or savings. For some people, it might be better to save 30% of their salary and only spend 20% on life's pleasures. Once again, time is the key ingredient with this. It becomes a lot easier if we've got time on our side. Okay. So take control. So certainly for some people, okay, if they're in debt in any regard, it's good to take control of that. And once again, don't bury your head in the sand, because there are options out there to help you clear debt. Okay, clear debt with high interest rates first, because they're the ones that's building at a quicker rate, of course. And there are advice guidelines and hotlines available, such as the Citizens Advice Bureau, National Debt Line. And once again, set a goal now to clear that by year X, and then set up a repayment plan. And obviously it's easier said than done a lot of the time, but it's all about setting yourself achievable goals that's going to make this easier, and putting it into a step-by-step process. Okay. Top tips to improve your credit score. So prove where you live. So first of all, register on the electoral roll if you haven't already. You do this even if you're in shared accommodation or living at home with your parents. Build your credit history. So actually having little or no credit history can make it difficult for companies to assess you. And so therefore your credit score will be lower as a result. If you are paying anything on the credit card, then, make these repayments on time. Don't, if possible, receive that penalty for a late payment. Old, well-managed accounts will generally improve your score. Where possible, keep that credit utilization low. Okay, minimize the use of the credit card. Certainly if you know that you're not going to be able to pay it back in a month or twice, in 2 months. Okay. See if you can get an instant score boost. So sometimes by securely connecting your current account to your Experian account, for example, you can show them how well you manage your money. These are all good tips if you are looking to do this, if you do need to do this. And one thing I do tell people to do as well is, check for errors and, report any mistakes on your credit report. Even small mistakes such as mistyped address or anything like that could all have an effect on your credit score now. Okay, get the idea. Like I said before, it's never ever too early. Okay, so there'll be a range of people on the call tonight. You could be a young future thinker and thinking, okay, I want to retire at some point. I know I've heard in the news that the state pension age is increasing. What does this mean for me? Always different things. Let's understand it now. Let's understand the ramifications, the implications, and what it means for you, how you can optimize your pension and your finances. And let's really drill down into this. Similarly, maybe a mid-career professional and actually have a few years left of working in retirement. You're thinking, okay, how can I then optimize my pension and the assets that I have been able to build up to ensure that I can have that retirement that I want? Okay. This is obviously, if you think that if you're going to stop working, whatever age you'll be in your 60s, perhaps earlier, later, I don't know, you're statistically likely to live around 20, 25 years. So we have to be able to find that income source from somewhere. Now, this brings me nicely on to the NHS pension. Because actually what you're building up in this scheme, if you're in the scheme, is a guaranteed income in retirement. Okay, so you're never going to run out of money. So actually you could be age 100 and still be in receipt of your NHS pension and your state pension. Okay. Now, what tonight is not is a granular, detailed insight analysis into the pension scheme. It's just going to be a bit of an overview, okay? Because this can get complex. It can. And what's important to understand at this stage of your careers is the value of this, okay? Because it is incredibly, incredibly valuable, not least because of the pension you're building up, which is, is a guaranteed income in retirement, but also some of the forgotten benefits, which we're going to talk about, such as ill health retirement, such as death in service, that you would not get if you were not in the scheme, okay? So now, the world of financial services, which is by my profession, my industry, is jargon infested. The world of pensions, even more so. And then, in my opinion, the world of NHS pensions, even more so again. There's lots and lots of jargon. Pension terminology can be very, very confusing. It's my job, it's your advisor's job to sit down with you and go through this in general layman's terms, because sometimes advisors don't understand this, okay? So don't worry. Sometimes you can do a simple Google, but otherwise sometimes there's too much information out there and you're trying to work out, well, does this apply to me, and all these different things, such as annual allowance, lifetime allowance, all these different words. Now, the key for yourselves, generally speaking, okay, is the defined benefits. I'm going to talk about this and talk about normal pension age there as well in the middle. Okay, so first of all, what's really, really important you understand is that your pension is not a defined contribution. There's two types. Defined contribution, defined benefit. Defined contribution is a pot of money. And myself in the private sector, that's my pension. Okay, so finite pot of money, it's invested. It goes up and down with the stock market. My employer, if I had one, I'm self-employed, but if my employer would contribute to a pension, I would contribute to it, and it's very simple. Now, that's not your pension. Okay, so if you've got family members, friends, not in the NHS, your pension is likely going to be different to theirs. Yours is defined benefit, okay? Now, this is an entitlement, like I said, to an income in retirement for the rest of your life. It's government backed, so you will always receive that income, and it's going to go up with the cost of living. That inflation figure we spoke about before, your pension will go up with that every single year. The current percentage that you see out of your pay slip every single month, the best way of thinking about that is going to current retirees, okay? And actually, once again, that's not going into a pot of money. Now, what I urge everyone to do and all my clients to do is to download their total reward statement every single year. Get into that habit of downloading it every August when it's updated. Because this is what it'll show you. It'll show you a current snapshot of your pension to date, okay? Now, this is just someone who joined the 2015 scheme. Once again, this is not a granular analysis into the different schemes. This is what the majority of you will just have benefits in, okay? Just to add all the confusion, there's different schemes underneath the NHS pension umbrella. Majority of you will just be in the 2015 scheme. That's what everybody in the NHS, no matter what banding, no matter what job role, is in. Okay, 2015 scheme. Now, like I said, what this will show you is your pension. Okay, current snapshot of your pension. And you'll see on this particular snapshot, the pension was 1,400. Okay, that means, based on that statement, that this person's pension would pay them £1,400 a year in retirement. But this person has only been on it for 2 years, okay, which is why it's somewhat small. So in the fullness of time, when you've done your career, set to retire, this will have lots and lots of years added to it, and it'll be your annual pension to take in retirement. Now, this will also be shown on your total war statement, and it tells you a little bit how it's calculated. Once again, trying to keep it simple at this stage, they take your pensionable earnings, which is this second column, i.e. your pay. Okay, they take your pay and they divide it by 54. Okay, so you can do that in your head. What's your pay divided by 54? Then, whatever that equals, is this third column. That's what you bank. And so when you get to your retirement age, all of those 54ths get added together, and that's your pension to take in retirement as an annual income. Now, something that's really, really valuable in this scheme is this fourth column. Actually, it makes this scheme generate pension income at a much quicker rate than the older schemes. They do something called dynamisation. And this is where they uplift that pension earned, that third column, by inflation, which is our CPI figure. Remember, the cost of living, cost of goods and services around us rising, plus 1.5%. So really, really valuable. Not only is your pension going up with inflation every single year, it's also going up with an extra 1.5%. So really, really, really valuable. Okay. Now, obviously, we know there's something called a normal pension age. We can absolutely, you can see that at the top of the screen somewhere. Normal pension age 67 in this case. Yours might be, say, 68. Now, we can absolutely take this pension earlier. We absolutely can, as long as we've done the planning. It's not a penalty. What they'll do is you'll incur what's called an actuarial reduction. Now, somebody say, okay, well, we were anticipating you taking this pension from age 60. We thought you were going to take it from 68. Take into account the fact that we're going to be paying you, 8 years longer than we anticipated. We're going to need to reduce your pension. And it's going to be around 4 or 5% for every year you take it early. But then you've got that extra 8 years worth of pension income in your back pocket by the time you get 68. So it's not a penalty. That's one thing to understand. Certainly when you're building this pension up over the years, it's one thing to understand. You can absolutely take this earlier. You don't have to drag yourself over the line. Don't need to tell you you'll be prone to burnout and all the rest of it in the NHS. Don't have to do that, okay? You can take this early when it suits you, when you're able to, when you're happy with the numbers. Now, crunch of time. Forgotten benefits in the NHS, okay? Ill health retirement, so valuable. If you're too ill to work, you can take this pension without any of that actuarial reduction. Death in service. You get 2 times your pensionable pay as a lump sum paid to a nominated beneficiary. Really, really valuable. If you're thinking of opting out, you have to understand these implications of what you're foregoing. Okay. So we do a lot with the RCN. Okay, you'll be glad to know that that's it from the NHS pension side of things. We do a lot with the RCN. Is generally speaking, if you go to them and the conversation approaches financial advice, they can't help. Okay, they're not authorised, not licensed to do so. They send yourselves over to us. We'll sit down with you. It's a one-to-one consultation. You won't have to pay for it through them. Okay. Use your RCN resources. Okay, there's lots online. There's a couple of links there. And also, maximise your member benefit with us. So we do offer a free initial consultation. We can go through these things with you if you want to. What's your plan? What are you trying to do? We can also help you if there's potential things that could derail that plan, such as what happens if you do become ill? Yes, you'll get an element of sick pay through the NHS. You may also qualify for ill health retirement. Then what if that's not enough? All these different things. Okay. So yes, message of the story is the NHS pension scheme is so valuable. Really, really is. You cannot beat it on the private market, generally speaking. And make sure we understand our finances, our financial planning. What's the goal? What are we trying to achieve? How can we work backwards from that goal to ensure we're putting the steps into place now to achieve that? Okay, thank you very much.
Thank you so much. That was really, really fascinating. I don't know about everyone else, but I learned a lot. Caitlin's been putting some useful links that are related to what you've said in the chat for anyone who would like to have a look at them. I love the 50-30-20 rule, or whatever what makes sense in your life. I think that's a really useful takeaway. And we're going to live 20 to 25 years in retirement. Goodness me. It's a lot of years to plan for, isn't it? Ollie, just one question for me real quick. The advice you give would also be suitable for people who are not on the NHS pension scheme, just in case we have colleagues on the call who aren't.
Absolutely. Yeah, definitely.
Super. Just thought I'd confirm that. That's wonderful. Thank you so much. Okay, so I think we're ready now to hear from, thanks again, Ollie. We are ready here to hear from Claire. If you do have any questions as we go along, please do put them on the chat so we can prepare people to answer you to the best of their ability. And I will hand over to Claire. Thank you, Claire.
I'm Claire Cannings. I head up the RCN Welfare Service. My team on a day-to-day basis mainly advises our members on their benefits entitlement. We also do quite a lot of work around housing rights as well. So what I intend to do this evening is to give you some pointers to ensure that, as well as the budgeting that Ollie's just talked about, we're also helping you to maximise your current income. So that's getting all the benefits and sources of financial support that are available to you as an early career nurse. This is so important at a time when there are many, many competing demands for your hard-earned income. So not all of the suggestions that I'm going to talk about this evening will be applicable to all of you, but I hope that most of you will be able to leave the session with at least one or two new ways of either increasing your income or alternatively reducing your outgoings. And even if they don't all apply to you now, they're definitely worth knowing about. Simply because they might not be relevant to you now, but they might be relevant at some point in the future, or they might be helpful at some point for a family member as well. So can I have the next slide, please, Thomas? So just need to say that I won't have enough time today to cover off all the potential money saving options, but my team have put a lot of time and effort into pulling together a series of what I would say is brilliant online financial wellbeing resources for our members on the RCN website. We've worked in collaboration with an organisation called Money Helper. They're a government organisation dealing with all things kind of money and debt, and there are some brilliant tools available to make sure that you're maximising your income. The tools can help with the monthly budgeting that Ollie was talking about earlier. So it's well worth spending a bit of time on the site, seeing which tools might be helpful to you, and hopefully picking up some additional ways of making your money go a little bit further, other than the ones I'm going to cover this evening. Thomas, can I have the next slide, please? So I'm going to start off with tax relief, as it's something that all RCN members who pay tax on their earnings can apply for. Now, I often speak to members who have been in nursing for many, many years. They've been in membership for almost the same amount of time, and I speak to them and they're still not aware that they can claim tax relief, and some of them don't even know what it is. So I thought I'd get in early and advise you to get your HMRC claims in as soon as you possibly can. If you claim tax relief, you can reduce your liability for tax, and obviously you'll be better off as a result of doing that. The forms are really easy to complete online on the gov.uk website. And once you've done them, as long as you continue to be eligible and you continue to remain in nursing employment, you'll continue to get that tax relief year on year. If you look at the case study in the slide, this is a basic rate taxpayer. So you can make a claim for any or all of these categories of tax relief. So if you look at RCN membership, if you're in full RCN membership, then you get tax relief of over £40 a year. Same with your NMC registration. You're paying your £120, but you'll get tax relief back for 24 of those. And in this case, this member is getting back nearly £120 a year. So hopefully, if you haven't done so already, you can all go away, spend a few minutes filling in the forms, and then start paying less tax for in the next couple of weeks. And also, if you had eligibility for a previous tax year, so that's before April the 6th, last month, you can also put in a backdated claim for that too. So instead of the £120 that you'd be better off this year, it would actually be something like 240. So again, you can just do that by filling in the form online. Next slide, please, Thomas. I thought I'd quickly run through student loan repayments. I'm conscious that this is only applicable for those in England, Wales, and for some students who have been studying in Scotland but are from England and Wales, and those who've taken out a student loan. But I thought it was important to cover this off quickly because it does come up time and time again. There are different plans that have different repayment thresholds. So make sure that the one that your employer has for you is the correct one. And the annual thresholds are also really important here. Your employer will calculate repayment against a monthly amount. Your student loan repayments are triggered when your income, and that's including any overtime, pushes you over that kind of monthly threshold for your repayment plan. So you might pay your student loan in 1 month, but if your annual income is still below the yearly threshold, you can request a refund at the end of the tax year. You've got to request it. They won't just give it back to you automatically. So you can do that request via the Student Finance England website. It's worth keeping an eye out for your P60, which you would have got or should be getting around about now, and you can use that to see if you're due any money back. So that might be money that can come to you at the end of the tax year as well. Can I have the next slide, Thomas, please? So childcare. Now that you're working or you're about to start work, if you've got children, a potential whole new variety of options for paying for your childcare will become available. It's a complex area and there are huge variations of options depending on your family income and which of the 4 countries you live and work in. The amount of free childcare you can get depends on the age of your child and also your family circumstances. But once you've established how much free childcare you can get, then the next step is to work out the most cost-effective way of paying for any remaining costs. So it's unlikely that the free childcare that you get will pay for all your childcare costs, especially if you're working full-time and if you've got children under the age of 4. But once you know your free childcare allocation, then it's important to do a benefits check. In most cases, and obviously there is exception to this rule, but in most cases, if you qualify for universal credit, this will usually be the most cost-effective way of paying for childcare. Like I said, there's always exceptions to the rule, so do a check. 2 of the other options are childcare vouchers or the tax-free childcare scheme. There is a brilliant online checker on the gov.uk website, and that'll tell you what you could be entitled to. Just put in your details. In a few minutes, it'll take to tell you what you might be entitled to from the childcare perspective. And it's really useful for helping you make an informed choice about which of the options to choose from. So don't just choose the first one that you come across or the one that your employer might be pushing and telling you about. It might not be the best one for you, so use the online checker to have a look. And again, there's loads more information on free and reduced rate childcare on the RCN website. Next slide, please, Thomas. So I mentioned universal credit briefly in relation to childcare. But universal credit is both an out of work and an in work benefit. It's often seen as a top-up benefit for those who've got childcare or high rental costs if they're in work. And we are also aware that unfortunately some students are finding it's taking them a little longer than expected to move into their first job. So if you do find yourself in this situation, then please do consider making a claim for universal credit. It can help sort of pay towards your rental payments and kind of help tide you over this period whilst you're looking for work. And even if you do hope to be working in the very near future, don't delay in putting in a claim. Make the claim now, because unfortunately universal credit is one of those benefits that can't be backdated. It is a hugely underclaimed benefit for those in work. They think that probably around 3 million people who could get some element of a universal credit don't claim. And you'll see that in the next case study that I'm going to have a look at. So Thomas, can I have the next slide, please? So this case study, this is a member who came in, who contacted the service. She felt that she wouldn't be able to meet her childcare costs when she returned to work. She's on a relatively good salary, and she felt that because of that she wouldn't be able to get any benefits. We did a better off calculation for this member, and it made a huge difference in terms of her decision around returning to work. She was on a salary of just over £35,000 a year, but because of her high rent costs and her childcare costs, she was actually able to claim universal credit of just a little bit over £1,000 a month. So please do take a look. Again, there are benefits calculators in the financial wellbeing section of the RCN website. We find that it takes no more than 15 minutes to check if you qualify. As long as you've got all the information to hand, the cost of your childcare, how much your rent is, all those details to hand, then it could be a really beneficial 15 minutes of your time. Can I have the next slide, please, Thomas? So alongside childcare, rent tends to be one of the biggest expenditures for most newly qualified nurses, especially if you've been previously living in a large student house where you've been sharing the costs of all the bills and utility. So this is just a few ideas for keeping the costs as low as possible. So one of the relatively new options that we've seen our members take up is property guardianship. And guardianship means that you're looking after property whilst the owner decides what to do with it. They might be waiting to get planning permission or to convert it or to sell it. We've had members living in empty pubs, the upstairs flats of empty pubs. They've been living in disused care homes, and they are paying a fraction of the rent that they would normally expect to pay. And often they're able to live in really central city locations, often very close to the hospitals that they wouldn't otherwise be able to afford. Some guardian companies only take on key workers, so you have a real advantage there. They love nurses because you've already been DBS checked and you're in recognised employment. It is a licence rather than a tenancy, so it can sometimes be short term. But we have had members who've been in guardianship property for much longer than the average short hold tenancy, and some have been in guardianship. I've spoken to people who've been doing it for 2 or 3 years. We can't recommend any specific companies, but you can search online for reputable companies. And as with any kind of legal agreement, we would urge you to check the small print on any contracts, but it can be a way of sort of saving money, especially if you're looking perhaps to buy somewhere in the future. Again, key worker, sorry, can we go back? Thank you. Key worker housing. I can't give you a lot of specific information about this option because there's a huge regional variation. Some are run by the trust, some are available via the council, some are private rental. Do your research and put your name down as early as possible on the waiting list. Sometimes they can have extremely long waiting lists, and put your name down on as many as you can. They can be a really affordable way of renting. Again, especially if you're waiting to buy. These tenancy agreements do tend to be a bit more secure than the guardianship arrangement. So again, good option for you. If you are looking to buy a property in the future, then there is something called a lifetime ISA. If you're happy to lock your savings away, then you can save up to £4,000 a year, and the government will top it up every year by 25%. So if you put in the maximum £4,000, the government will top it up by £1,000. It's kind of free money, really, but you do have to be the savings do have to be kind of tied up either until you buy a property or if you reach retirement age. So do think carefully, but it is a great option if you're thinking about building up for a deposit for a house. And then there's the key worker part buy part rent scheme. Again, these vary greatly across the UK. Please, if you're considering this option, do shop around and look at all the clauses before committing. These schemes work really well for some people. They enable them to get on the property ladder, but there are often quite a lot of restrictions in terms of when you sell on the property. So think ahead, what are your future plans, what they might be, and do factor that in before you commit to a key worker part buy part rent. Next slide, please, Thomas. Just a quick bit about debt management. I know Ollie mentioned this earlier, but as lots of you will already know, once you qualify, the debt that you have can be a lot more expensive than when you were a student. Things like credit cards, they often have special student deals in place, and when you qualify, a larger percentage of your hard-earned cash will be going on interest payments. So do make sure you shop around for the best deal and get the best credit that's available to you. Again, lots of advice available on the RCN website. There is no one size fits all with debt, and the RCN, like I said, works alongside Money Helper to ensure that all the potential options are explained to you around debt, and also advice on seeking specialist debt advice if you need it. Next slide, please. Finally, just a little bit about charities. I mean, obviously, nobody wants to see nurses leave the profession for financial reasons, and that's obviously why the RCN is always campaigning on pay. But charities are another resource for additional funding for those who are experiencing severe financial difficulties, especially when you've recently qualified. You can find that some of the debts that you have become slightly unmanageable. The RCN Foundation Benevolent Fund and the Cavell Nurses Fund are two of the better known nursing charities, but there are many more sort of less well-known funds that get very few applicants. You can use the Turn to Us website. The link is at the top of this slide. Now, charities won't normally pay for consumer credit debts. They won't normally pay for loans or credit cards, but they can help with the cost of living grant, can help with rent arrears, utility costs, or they might be able to help you buy an essential item such as a new bed that your child might need if you've moved into a new property and you wouldn't otherwise be able to afford. Like I said, if you do find yourself in this situation, the Turn to Us website is fantastic. They've got a huge database of grant-giving organisations, not just for nursing. It might be that you can apply for a grant related to where you live, or might be something obscure like what your parents did for a living. You just put your details into the database and see what pops up. And the website also gives you really good tips for making a good application. Next slide, please, Thomas. Like I mentioned previously, as part of the support that you get as being an RCN member, there's lots of information about maximising your income. There's benefits checks on the financial wellbeing pages, as well as the childcare option, charitable funding. So do spend some time looking through the slides. Next, Thomas, my last one, I think. And finally, the RCN does have some pretty exclusive member discounts. Your student ID will previously have given you access to discounts, and you might be missing that. So just wanted to mention that your RCN membership does give you access to discounts and cash back on purchases, things such as utility bills, particularly brilliant reduction in cinema ticket prices, and things like insurance. I would suggest that you don't buy or pay for anything before checking online to see whether you can get it cheaper or perhaps get cash back by using your RCN membership discount. Okay, that's all from me. Thank you very much.
Incredible. Thank you so much, Claire. That was
Timing.
a brilliant timing and a wealth of information. While people think about their questions that I'd love you to pose, I'll just reflect on how much the RCN offers. It doesn't really matter how long you work with or for the organisation, you find out more things when you attend these sorts of webinars. So it's pretty amazing. And I really enjoyed the kind of out of the box ideas, like property guardians and something that I've only heard of abstractly, but that's a really great idea. Or property guardianship. Yeah, and the case study was super interesting too, how much actually people can save if they get a little bit of help to understand what's out there and what's available. So that's really, really incredible. Thank you very much indeed. So we will go to the next slide, which is the questions slide. And I haven't got any questions yet. So I'd love you to ask some. Though I do have a comment, I think. I've just seen it come through. Oh, so we have some just in the chat, which is brilliant. So it's overwhelming thinking about the next steps after graduation. Can these lessons be provided to third year students in uni? Stacey, thanks for asking that question. Yeah, I think that is something that universities could provide. I don't know, Claire, if you have any experience of working with university providers on this.
Yeah, we've done it for RCN members. We haven't specifically done it within university. I am going to be doing a session at the student event in Nottingham next month, and that will be recorded. So that's aimed at all students, but there will be quite a lot of third year students there. If universities approach us, we probably wouldn't do it on a university by university basis, but we could certainly send a recording, and that might be something that we can think about.
Yeah, and I guess
I'm happy to very open to ideas. So
yeah, as many people as we can access, right? Yeah, and I think to a certain extent there would also be help that outside of the RCN within your university, I'm sure, through access through the welfare services.
Yeah,
or the student
most
union
universities will have a welfare service in place.
Yeah,
but great comment.
Yes, yeah. Maybe that's somewhere we should go next. What is the name of the online forms on tax relief? Maybe our great colleague Caitlin has popped the link on the chat. Is that true, Caitlin? Maybe.
If Caitlin hasn't got it, I can search for it very quickly.
I was going to say, if Claire, if you've got it, I've not got it.
Yeah, I can find it. What I would say on that is that on the RCN website, it's good to use the RCN advice guide, because that will also take you to the proof that you need for HMRC to show that you're an RCN member. So obviously the HMRC need to know that there's certain things that you can automatically claim, such as you can just tick a box to say that you have to buy tights or socks to use at work. But things like your subscription to the nursing standard and your RCN membership, those are a choice. So you do need proof that you're paying. And if you go to the RCN website, there is a link there, and that will provide you with what you need. So I'll find that for you and I'll drop it in the chat. I'll just do that now.
Wonderful, thank you. And we've got another question about whether the slides will be available. So a whole recording of this will be available, and we will send the link to that recording out to you, so you will be able to access all of this information. And if you have a look through the chat for this now, you'll see many of the links to the things that we've spoken about already on there, which should give you a really good starting point while you wait for that recording. Someone's been asked, how do you use the discounts to budget? And I think you would do that quite effectively by using the student money guide, as my brilliant colleague Caitlin has suggested in the chat. So there's a link to the student money guide there that will help you, give you some tips on how best to use some of those discounts and some other tools to help you with that budgeting. Then we've got one for Ollie potentially. For credit score, will it be affected if I do not use a credit card? Great question. Ollie, are you able to answer that?
No. So in theory, no. I mean, a way of improving your credit score would be to, actually get a credit card to put things like, your monthly Netflix subscription on there and things, just so they can see that if you have got credit, then you're paying it back. It doesn't matter the amount sometimes, but that could be a useful thing to do. Okay, in terms of improving credit score. Otherwise, I don't believe it adversely affects it, but I'm not 100% on that actually.
Great, thank you very much. And then Ruth has asked, could you please run through how to work out an estimated net monthly pay? For example, if 30,000 salary with standard tax code, in what order is student loan, pension, tax, etc. then deducted? I will ask this to our brilliant presenters, Claire and Ollie, but I wonder if the answer might be to have a one-to-one with one of the member benefit offers that we have. Do either of you feel able to?
I have just popped a income tax calculator into the chat. That is the best way, because we're not able to give you advice on your particular tax code. It's a very specialist area of advice, and if we gave you the wrong advice, then we'd be in trouble. So it's best to go online. Your student loan is calculated based on your gross income before tax and your pension payments. That might answer your question. So if you're looking at that slide that I gave you previously, you're looking at your gross income. So it's the line that says gross income, and that's what they will be using to calculate whether or not you start making payments or not. Different for different benefits like universal credit, they'll take off your pension, but for student loan, it's your gross. I hope that answers your question.
That is super useful, thank you. And it is, as Ollie said in his presentation, pensions and things like this are incredibly confusing, aren't they? I have had some, I've got 2 employers, and that is too much for my tax knowledge to handle sometimes. Yes, thank you. So we've got some good questions coming in. So it's hard to pay back the credit card at the moment. Once I finish uni and get on top of this, will that affect my decision to get a mortgage, or I guess abilities to get a mortgage? Probably one for Ollie, I guess.
I must admit that would depend on individual circumstances, definitely in terms of agreements with banks and lenders, etc. But it could well do. Okay, it could well do, and it may be that you need to improve your credit score before you can, But saying that, there are some lenders who will still lend things like that. You may pay a slightly higher interest rate on the loan, but otherwise, it's for you to kind of explore that option, I think.
I think another point to add is that the difference, Stacey, between defaulting on your credit card and getting on top of your credit card, because obviously if you're defaulting on the payments and not making the minimum payments, that is going to affect your credit score. But if you're making the minimum payments, sometimes that actually has a positive impact on your credit score, as long as you're making those payments. So even if you're just making the minimum payments, I wouldn't be overly concerned. Most students who finish university and start in work find it difficult to kind of make headway initially into clearing those debts. So I would strongly advise you to make the minimum payments, not default.
That's really good advice, actually, isn't it? Because sometimes that might not feel enough, but actually if that's the best you can do, that's the best you can do.
Then just keep doing that, keep plodding away at it.
Brilliant, thank you. And then I guess that's related to how can I reverse a poor credit score? which I guess you covered to a certain extent. Does anyone want to just recap on that?
I think Ollie, you got any advice on that particular?
I mean, I must admit, so when it comes to debt and managing debt, is we tend to direct people to the various experts, such as, you know, citizen advice and things like that. But yeah, certainly from my understanding and, you know, my point of view, it would be the case to say how we then go to improve it moving forwards. Okay, and there are credit cards you can buy that, you know, like a foundation level, and they're there for that to try and boost your credit score. And similarly to what I was saying before, time is the key ingredient with all of these things a lot of the time.
Yeah, again, like I said previously in the previous slides, we have worked in collaboration with Money Helper. If you go to the RCN Financial Wellbeing pages, there's links there to credit scores. Money Helper have got some really helpful information about building that back up again. So
great, thank you both. And we'll just do one more, I think, because we have 4 minutes left. So they can be merged into one. Does who you live with affect your entitlement to benefits? And actually, it is a second question, but I've hinted at it now, so I'll ask it. If I'm a carer and claim carer's allowance, would that affect my entitlement to further benefits?
Okay, so I'll cover the first one off first. The people that you live with does and can affect the entitlement to benefit, but it depends very much on that particular relationship. If you are living independently, so for example, if it's a flat share with a friend, then that arrangement won't impact on your personal allowance and the amount that you can claim as an individual, although the tenancy agreement might impact slightly. But if you are living cohabiting with somebody, then that's a whole different scenario, and you are seen as a couple, and it does impact on your entitlement. So the short answer to that is yes and no, depending on situation, and I would direct you to the benefits calculator. Like I said in my slides, it will take you 15 minutes max to go through that, and you can put in your kind of honest scenario just for your benefit and see what it comes out with.
Wonderful. And if I'm a carer and claim carer's allowance, would that affect my entitlement to further benefits?
Positively, yes, often. You can get the carer's element of universal credit. It can be complicated because if you get the carer's element, then you'll know that there's been in the news quite a lot recently. There's a limit to how much you can earn before that carer's benefit is cut off completely. It's not staggered, so that is hopefully going to be changing in the future. I would say, given those circumstances, come and speak to us in the welfare service, because it sounds sort of fairly nuanced, and I think probably I probably couldn't do it justice here. I probably need to speak to you, so get in touch with the welfare service. We'll talk you through it.
Brilliant. That's great advice. Thank you very much. Wonderful. So I would just like to say a huge thank you to both of our speakers, Claire and Ollie, tonight, and also for you all for attending and for engaging with questions. There were some great questions there, but also to my colleagues in the background. Thomas Matthews has been the slide master and our AV wizard. Ben, who's from marketing, has also been working really hard in the background to get on top of the slides and to help us organise and market for tonight. Caitlin is, as always, tirelessly working away in the chat. I think we're also going to put a link to the inval in the chat. There we go. Ben's just popped that in. So thank you very much for joining us. Please do fill out the inval because it's really useful to hear what you think of what we provide. And Jitan is another colleague at the RCN who couldn't be here tonight, but has also been instrumental in getting this off the ground. So thanks to him too. Thank you again for attending. If you're not already an RCN member, do think about joining, because as you have heard tonight, we offer a great deal and we'd love to have you on board. Take care, everyone. Thanks again and goodbye.